Before we begin, it's my pleasure to introduce our speaker for today, Dr. Ahmad Daniel Zainuddin. You can call him Dr. Daniel. Now, Dr. Daniel is an academician and financial professional with a strong record of contribution in the financial market research. Currently, he serves as the senior lecturer in Asia Pacific University of Technology and Innovation. Prior to academia, Dr. Daniel has extensive industry experience in the capital market industry in various banks, and he specialized in structured warrants and derivatives trading also. Besides that, Dr. Daniel is also a certified financial technician. So without further ado, let me pass this presentation over to Dr. Daniel. Dr. Daniel, the floor is yours.
All right, thank you. Let me just share my screen now. Right, can you see my screen?
Yes, your screen is up.
All right, so thank you, Mr. Saul, for a kind introduction. Good evening, everyone. My name is Dr. Daniel, as introduced by Mr. Saul just now. Again, I think I would like to thank you for joining us tonight on sharing another sharing session by me from me for this year, mastering FKLI with sentiment analysis for smarter trading. I like this topic quite pretty much rather than sharing fundamental analysis and also technical analysis, because I believe that every FPL trader, or if you yourself a trader, you can ask yourself, you always watch the price and the volume, but you can again ask yourself how frequent or how often that you measure the mood, the sentiment, the crowd psychology behind every trade, behind every volume, behind every price. I believe it's very rare for us to analyze behind those things. When we see the price going up, when we see the price going down, we just quickly react onto it. The thing is, right, based on my observation, based on my experience, based on what I have observed um, in these years, markets, it doesn't matter whether it's FKLI, CPO, etc., not just numbers, they are actually the reflection of fear, optimism, and crowd psychology. So that brings me to this topic tonight. So now I will share. Okay, I really like to use the word sharing because I believe the knowledge is not mine. It's not entirely mine, whereby I just collecting and discovering the pieces of knowledge from here and there, then gathering it and share it with everyone that I think need it at most. So I don't say myself as a founding father of the knowledge, but then I'm just merely sharing it for your for your good use. So there are 6 things basically tonight I will share with you. The first one is I would like to share with you why sentiment matters in FKLI. I think it's better for me to remind you that KLCI futures is in Malaysia. Malaysia under MSCI country classification, we are still being classified and categorized as an emerging country. So emerging country, based on the past researchers, they say it's not really efficient as in like the developed countries. So fundamental analysis doesn't work really well in every part of the market or the trading. So we still, yes, we're still listening to the news. We're still, observing the data, the report, and so forth. But then technical analysis cannot be separated from our day-to-day trading activities or trading strategies, because not everything is being translated into fundamentals. So that's why we need to understand well. If we cannot understand it all, if possible, some big pieces of sentiment in FKLI, we need to understand it so it can help us when we are trying to devise our trading strategy. Number 2, I would like to share with you how and the definition of the smart money. Smart money, the term smart money is actually being popularized more than 20 years back. Even before I was registered as a licensed person in capital market as a derivative dealer, I believe the term of smart money has been around since ages. So again, today we will see whether there is another change, or is there any what you say? Is there any new or developed definition or improved definition of smart money, and how do we spot them in FKLI? Number three, we are going to look at some revision about the correlational between the spot and futures of Malaysian equities, FKLI versus KLCI, because I believe correlation is everything. Usually, if you ask around some of the people, some of the traders, they say they are looking at KLCI spot. Some of them, they say they are seeing at the FKLI. So if we ask them properly, they don't have a pretty clear idea which one they should refer actually. Should they refer to the spot, or should they refer to the futures itself? So looking deeper, if we delve further into correlation properties between the spot and futures, it can help us to determine, or where to see to what extent we should actually put our attention on the correlation between spot and futures. Number four, the news are very psychological, because some of the markets, the news are actually the leader, the news are actually the predictor. But in Malaysia, it still need to have further research. It still need to have further study. We should analyze more how impactful is the news. Sometimes the news is a follower. Sometimes the news just report what happened. But sometimes news will give us hints what is going to happen next. Number five, 1, 2, 3, 4, 5, technical analysis tools. I will share with you as well. Out of thousands of technical analysis tools out there, especially if some of you got accounts TradingView, you will see there are thousands of technical tools, technical indicators, oscillators, and so forth. That doesn't count some of the traders, some of the users of TradingView. They are trying to do the hybrid. They combine one indicators with another, because nowadays the access to the coding program, the coding platform are quite, extensive. So everyone can do everything, almost everything. So out of everything, out of these thousands technical indicators, which one is actually, quite simpler and friendly for you to use to trade FKLI? And lastly, I'm going to share with you how to do a very simple DIY sentiment tracking and forming a strategy. This DIY sentiment tracking, I don't develop it 100% myself. This is from the observation of my past clients. Some of them, they're quite diligent. They develop their own spreadsheet. Some of them, they just, depending on the trading calls, trading commentaries by the brokers. So combining these inputs, that's what am I going to share with you tonight. So these are the 6 things that we are going to discuss tonight further, so that you can see which one is helpful for you to trade KLCI futures. All right, moving on. So based on the ESMA report 2017, yes, I know it's quite dated, but the thing is, the report is a report, the data is the data. So to date, I'm yet to find an updated report or statistics about the CFD/future trader losses in anywhere in the world. I'm not sure why the information is keep being well kept, but this is the best that we can have as for now. If later you can find more updated data or statistics, you can share with the rest of us in other session. So if you are retail traders, probably you can ask yourself, right? Why most of, or even you probably, why most of FKLI traders miss the big moves? I believe you know what is the big move looks like in FKLI, because overall, I would say FKLI from, since like 10 years back, 50 years back is quite quiet, quite silent. But the thing is, when there is shocks, when there is surprise, it just moves. So we, as a retail traders, we don't really have a tool to spot before it happens. It just happened, right? Although me myself last time, I just sit in front of the trading screen watching the prices moving up, moving down quietly, but out of sudden the price move, abruptly. Even me, I won't even know at that time what was the reasons behind it. And here, I would say, based on the ESMA 2017 report, it says that 75% of retail futures traders in Europe lose money over time. Many rely on delayed signals without understanding market psychology. However, if we conduct the same survey, the same study in Malaysia, I believe that we will get a similar result or similar data. Two-thirds of the FKLI traders in Malaysia lose money over time because of the failure of understanding market psychology. Market psychology is basically is a borrowed discipline from our friend in psychology discipline. Finance itself is numerical. We are numerical, but the problem is when it comes to psychology, okay, when it comes to the questions of hearts, when it comes to questions of anxiety, nervousness, and so forth, things like this are quite hard to quantify. So that's why we talk to our friend in psychology discipline, psychology school. Hey, do you have anything that we can borrow in order for us to learn or study more about psychology in the financial markets, in the capital market? So that's what we have right now, market psychology. Right. So again, FKLI is not an exception. Okay, sentiment shift precede price move in futures market. Because I think everyone is agree. Every headline, every policy comment, every rumor, they shape the mood of the market. And those shifts often show up in sentiment before they appear in prices. The prices is just a reflection. But before the prices move, okay, the sentiment move first. That is something that we need to spot, we need to identify before the price even have time to move. So how are we going to do that? That will be explained in my later slides. Right. As in like what I put in the bottom here, price is what you pay, sentiment is what you pay. As in like when we are trying to, to calculate, to determine the fair value of a stock or fair value of an asset, we try to find a fair price during asset valuation process. The market price is the market price, but then why you're paying it is because of the fair value. So the same thing. It's just the difference is we are not going to do any discounted cash flow in this part. It's just how to actually translate or interpret the market psychology based on whatever that we have in our hands right now. So market has mind, as in like human, it has mind, it has brain. Okay, it's just that we cannot see it. What is our market sentiment? Market sentiment is a collective mood. Either it's optimism or fear. It is reflected in news, the trade flows, and trader behavior. These things, except news, we cannot see it, in the naked eye. It's just been reflected in the price and on your trading screen in the bid and ask volume columns. Sometimes you see at a bid volume, there in the market depth, in the price ladder, there are a lot of queuing orders waiting to be matched. Sometimes they are cited to the bid. Sometimes they are cited to the ask column, to the ask side. That is something that we can interpret easily as sentiment. So we have to treat this as important as doing fundamental analysis and technical analysis, because FKLI, as what the scholar is saying, okay, it reacts to fast sentiment, especially around politics, especially politics right now, and also global shocks. And sentiment often shape before price, as what I have mentioned just now. And for someone that is probably experienced enough in the market, they can read this early signal. And that is what we want to learn from this experienced trader. So basically, I want to say is this is why tracking sentiment gives us, whoever that can interpret it, give them an edge in FKLI. All right, next So what are the sources of sentiment? There are a lot of sources of sentiment in FKLI markets. It's just that there are three of these sources are quite major. The first one is the news and media headlines, whereby it shows the crowd emotion like fear, greed, panic, or excitement. Number two is Bursa directive positioning, but I believe so far we don't have the buy, the net long and the net long or short position. The best that we have right now for retail traders are just the traded volume of contract months of FKLI. If some of the time we see the near month will have more traded volume. Sometimes we see the far month got more traded volume. That will mean something. Okay. Let's just say now is what month is now? Now is August. Let's just say we see December 2025. The traded volume is more than September or October futures contract. So it means that December people are expecting something. It's just that we need to identify, we need to determine whether it's a bullish or it's a bearish. But now one checklist is already ticked. What checklist is that? There is something big happen in December or November at the end of the year, which makes the volume appear to be more than the rest of the offered contract months. Number three is a technical price pattern, which is a sign of herd activity such as breakout, reversal, or exhaustion. This one, technical analysis, they really like it so much. But overall sentiments, like I read it in here, sentiment is not abstract. You can see it. It's just that you need something to confirm it, right? You can see, it happens, it exists. It's just that you don't know how to verify. Not only to see you, but me also, me as well. I don't really have an exact or 100% working method or metric on how to verify or validate. If you ask our friends in as a technical analyst, they will always say, this breakout will confirm that indicators. These indicators will confirm that crossovers. This confirm that confirm this. So it becomes, one confirming each other. And at the end, we will think which one is actually confirming everything. That is a very hard question for any one of us to answer. So if we keep questioning in such manner, we will go nowhere. Okay, I would say that we will go nowhere because let's just say at this moment you are doing FKL trading using three technical indicators. Okay, and you are waiting for two indicators to beat the other one. So if let's just say three of them giving you mixed signals, so which one is confirming each other? That will give you a confusing signal, and at the end you will be anxious, or you will be you will decide that I will not trade during that particular day. Now you are missing the opportunity. So that's why I'm not really into the idea of although myself is a technical analyst, I'm not really into the idea of this confirming this confirming that confirming this. As long as as long as you have a good trading system with whatever workout in the past trading, I think that one still can be used. And since as long as it's it's still performing, it's still earning profit, it's still earning money for you, you can just continue using it. That is what my take about the trading, trading using the technical analysis. Right. Next, I would like to share with you about how smart money moves. So sentiment analysis is about capturing how traders feel before they act. They see it in the headlines, okay, as in like the social media chatter, the institutional flows, etc. Of course, it reflects emotion, fear, greed, what else? Optimism, pessimism. But most importantly, sentiment shift usually before price move. Why? Because the smart money react first, retail follows later, as in like this diagram here. Let's just say the T here is actually today or this hour or this time. Let's just say now is 3 p.m. So when we see a big movement, or when we see there is substantial or significant FKLI price movement. Actually, the sentiment start before 2 hours before or 3 hours before. We can say about 11 a.m. or 12 p.m. Okay, 3 to 4 hours before they decide to make a move. It started, the news spread, but then only few people knows about it. And after that, we can see, although it's not very clearly the sentiment shift, then only the smart money will move the market. After that, you will see the price drop, and only the retail panic. When the retail panic, I would say is quite late. That's why most of the time we see around 4:30 or 5 p.m. the price of FKLI in any contracts, they move quite fast and volatile, because the retail traders, they are anxious, they are trying to compete with each other for the best price, whether they are exiting positions or they are creating the new one. Okay, so that is actually how we know that smart money actually taking the positions first before the retail. But then how's the retail see the market? The retail, as you like the diagram here, retail traders often react in very simple chain. Okay, this is for institutional overall. This one is the overall market behavior. This one is retail. How the retail traders, how the retail traders see the market. The retail traders often react in very simple chain like this. The news creates emotion, then emotion creates action, and that action moves the price. For example, a headline about interest rates sparks fear or greed, which triggers buy or sell orders. If it sparks fear, it triggers the sell. If it sparks a bullish sentiment, it will triggers more buy orders. So this cycle shows to us why prices often lag behind the initial emotional reaction. Next, okay, so what is smart money anyway? Smart money is a capital control. It refers to capital control by players with better access. Okay, we can say they are institutional. They have better access. They have better data, better influence, whereby there are institutions, that can be the hedge fund, that can be, I can say, any insiders, if they exist. But surely there are institutions, because they have a bigger capital. What they do, they move early, they quietly building positions and exiting before we know it. Okay, we know it. So that's why their behavior often signals market shift before price confirm it. So in a nutshell, if we can detect, okay, we can detect smart money flows, we can gain an early advantage over other traders. So I'm showing you the comparison between the smart money and the retail traders. As you can see here, smart money experts, they build positions quietly. Institutions accumulate low volume periods. This one is just repeating of previous slides. Smart money relies on data and sentiment flows, while retail reacts mainly to headline and charts, because that's the best sources that we have. So in short, smart money fades the crowd, retail follows it. So this contrast explains why tracking smart money behavior is critical, right? Because we have quite limited and to say very, very little less information and resources than smart money, these institutional players. So who qualifies as smart money? The first, you can classify institutional investors as a smart money. Number two, prop trading firms. Okay, proprietary trading firms, they are building, they are having their own algorithm. Okay, how this algorithm works? From my experience, I would say that they are building, they have their own they have their own algorithm. So this algorithm actually pipe in, and they resource the API, okay, from the online or live prices. So the algorithm reacts based on whatever the prices pattern or behavior, then the algorithm will react. whether they should buy or they should sell next. So it consists of three components. One is the API, second is the algorithm itself, third is the parameters. It depends. If the price like this, so what's the algorithm is asked to do? If the price goes like this, what will be the algorithm is asked to do? So that is something that when we say prop trading firms, they gain advantage over the others. Number three, experienced insiders. This one, not to say that there are no insiders, but then of course we know there are insiders. It's just that we don't know how to, we don't know how to define the insiders. Number four, informed individuals. Some of us we have we are being informed. We know some information earlier than the rest. This one, I would say it equates with very old and classical traditional philosophy of EMH by Eugene F. Farmer, efficient market hypothesis, whereby this EMH classified into three, the strong, semi-strong, and weak. So some of us, we are in the strong category of EMH. Some of us in semi-strong, the rest in the weak form of EMH. So I think although this this theory, this hypothesis, EMH already 50 or 60 years old now, but it is still relevant because human psychology is relevant until the end of the world, until the end of the time. So until now, people are still citing it, still quoting it, still talking about it. So you may refer to the image by Eugene F. Farmer, which was published in 1965, 1960, so that you know better about advantage information that is advantageous to some people. All right, moving on to the next slide. In here, if some of you have trading view account, okay, you can have on your chart the first one, okay, at the top here, the sentiment. Under it is a OI, then we have the prices, and lastly the volume. As you can see, you can notice that how sentiment dropped before price. It's because the smart money was already turning cautious while retail was still buying. So this is the sentiment. The sentiment is already deteriorating, going down. But the FKLI is going up, right? So this one moved down first. This one still accumulating, still building its pace, going up, right? And indicator number two, open interest. This is open interest, stayed high, still at a high level. When price are flat, it's not that flat, but then we can say it's not going anyway that much. They suggest accumulation or institutions holding positions. Number three, the volume. Here is the volume. The bottom here. When volume spike, it match reversal. You can see, you can spot this spike, this spike, this spike. Whenever it spike, it match your reversal. Where is the reversal? Spike here, there's a reversal here. Spike here, there's a reversal here. Spike here, there's a little reversal here. Spike here, and there is reversal. So we can say most of the time, or 2/3 of the time, whenever there is a spike on volume, there is always reversal. So there is another indication. So how many of indicators we have here? We have sentiment, we have OI, we have volume. So these three are actually giving you better sentiment analysis, a DIY sentiment analysis for you to do it yourself. So what really moved FKLI sentiment? Overall, we can say that FKLI reacts within minutes, not days. Although you see, even though you are sitting right in front of your screen, your trading platform, the prices, right, seeing the prices up and down, I believe you can notice that FKLI reacts within minutes, not days. Although it's very, very quiet. The insight here is that, using daily charts alone, it will give you a tendency of missing the signal. So I would say to catch a sentiment-driven move, you must monitor intraday flows as well, right? Number two, market often price in non-events ahead of time. What does it mean? It means that the real, the real advantages come from anticipating the surprise. As I said just now, we are not, we are not depending solely on the technical analysis or fundamental analysis, but then we are expecting any surprise. So when we know that there is a price to come, we will be ready, whether it's a sell or buy position. We won't be waiting for any schedule announcement. That you say tomorrow, PMX is going to announce something, and only tomorrow you will be ready for the next move. I would say you are late, right? You just have in your mind that the fear is already sparked in, right? Tomorrow after the announcement is just time for the others to react. Number three, institution players drive FKLI more than retail traders. It means that tracking institution, as in like here, okay, although we are not very 100% sure this our institution or they are they are consisting the retail traders, but at least we can read, okay, we can read what are the people in the market is doing right now. Okay, we cannot say that this is 100% institution, this is 100% retail. But the thing is, most important thing, we can see what others are doing. So this means that the institutional positioning, okay, let's just say we can spot them, offers foresight, while retail data usually tells us what has already happened. So that is a point number three. Point number four, we have other driving factors like ringgit and politics. The FKLI, we cannot deny, highly sensitive to these domestic shocks, or sometimes FKLI is reactive more than global news, right? So next, I'm going to share with you some numbers. Usually for finance researcher, these four things are quite fundamental and important in order for us to see the basic correlational between the spot market and also the futures market. The first one is the correlation. The second one is causality test, because we have a belief that correlation doesn't shows any causation. So in order for us to know whether KLCI impacting the FKLI or FKLI impacting the KLCI, we need to have another test. We call them as a causality test. Number three, we have cross correlation. Cross correlation is something that we can say we are trying to see if, we are trying to see if, the price FKLI or the price KLCI today is correlating with its spot or its futures historically. So there is cross correlation, and we're trying to see up to the 20 days, 20 lagging days. And number four, residual correlation. Not only the mean of return, but we are trying to see if there is any unexplained factors that, unexplained factors in KLCI related with the unexplained factors in FKLI. So based on what we can see here, FKLI and KLCI move in tandem, very close. Correlation positive 0.86, but if you see the causality test there, it shows a bidirectional influence, because shocks in one, it spill over quite fast. Number three, cross correlation also it shows quite weak, meaning past KLCI doesn't predict FKLI as well, and also the past FKLI doesn't really affecting KLCI. So although FKLI is a futures contract for KLCI, it doesn't really work well to predict KLCI, and KLCI doesn't work well to predict FKLI. So if you ask me, I'm not so sure about the complicated relationship. And lastly, the high residual correlation, which is again we are trying to quantify the correlation between the unexplained factors in KLCI with the unexplained factors in FKLI. It shows that both react to the same hidden forces other than what we have known. These hidden forces can be sentiment, global news. So in a way, I would say KLCI is useful for some context, but then not really reliable forward signal for its futures contract. Correct. So next slide. this is what we know so far about key papers, key research about sentiment and FKLI, KSI linkages. Based on what you can see here, only one study, Thomson, recent one, finds FKLI can lead KLCI, but only under institutional stress. So it means that the market fear most, okay, and it will affect, it will give more bearish sentiment, right, other than bullish sentiment. So it is conditional. Most of other studies don't show any directional leadership. Instead, I see they highlight how media tone sentiment indices and open interest, or I, drive volatility spikes. So we can say that there is no single factor explain the spot and features of Malaysian equity. Okay, Malaysian equity. So if, let's just say, we want to conduct another study, a very or better or robust model must combine the technical, the news, and institutional behavior. Right, so moving on. So what we can say so far, FKLI can lead KLCI only in the stress market, but we can use FKLI as an early warning. Number two, sentiment shift from media, volume, or macro indicators are strong predictors. We can use them, we can track them for trend signal. Or I is also can be a volatility gauge, not gauge, not a directional. It's very useful for position sizing or option strategies. And lastly, I would say news-driven volatility is temporary. It's just, people just reactive because of emotion, and it will tend to revert to its mean state or its normal state. So that is what we can derive, what we can conclude from the past research. Now comes to I would say, the core content of my sharing. Can news sentiment predict FKLI? To do this, we are going to utilize the natural NLP, natural language processing. Okay, NLP is quite old. I think more than 5 years old in academic environment, but then we are still using it until this day. So one of the methods using NLP-based method, we call them as a VEDR. I can't really remember what a VEDR stands, but most of the time we use it to extract daily sentiment scores from the news. As our scenario here, we are using the Age. I think everyone knows the Age news. Okay, so we tested this by extracting sentiment from the Age again using VEDR. It's an NLP tool. Each headline, how we doing it? Each headline we give a score, ranging from -1 to +1, as in like the correlation magnitude. So this -1 to +1, it captures whether the tone is negative, neutral, or positive. These daily scores are averaged into a sentiment index, then it is being paired with FKLI returns to see if there is any correlational magnitude or correlational direction between the news and also the FKLI return. The main idea here is to see whether shift in news shows or it impacts FKLI in any way. So that's how we are using NLP-based method. All right. So from what you can see here, actually we are trying to analyze the relationship. We are trying to analyze the causality between the FKLI returns with the sentiment score from the news that we have. By using the leg days of today, T-1, T-2, T-3, T-4, T-5. In the context of we are trying to see whether today's return is correlated with the past news, yesterday's news, 2 days ago's news, 3 days ago's news, 4 days ago's news, 5 days ago's news. But we can only see it's not significant. It has impact, but then it's not significant. We cannot say that it doesn't have impact at all. It has impact. It's just that it's not that significant, right? So this is This is the conclusion that we can draw after we are trying to convert the news headlines into sentiment score and try to correlate them with the FKLI returns. Hopefully this one can help you in a way to devise your trading strategy. All right, then moving on. So the results are clear, I would say. Okay, the results are clear. News sentiment has no significant predictive power for FKLI. I think it's quite obvious because most of the time we see after the market move, after the the price move, the sentiment move, only we can we receive the updated news. This one I think is exclusion or it's not included uh, for the news from Bloomberg and also LSCG, because usually the Bloomberg and LSCG news, when they pop out, they give us a plain, straightforward, and early alert. So other than that, CNBC, Reuters, or other news sources, news cables, after the market move, only they report what happened. That whoever that follow the news, I would say, is not really working when you trade like that, right? So what is this telling us? It tells us that sentiment by itself is not enough. Prices don't move just because tone shift in headlines. So probably you need to shift your attention rather than focusing on the news. Probably you can, you can try to see how impactful of the news with some markets. Sometimes it can be a predictor, sometimes it's not. So probably in this context, FKLI is not really impactful, but for FCPO, we are not really sure. So there is no one tool or one conclusion fits everything. Although in FKLI it's not really useful, I would say we don't throw it away. We don't just discard it. It becomes useful when we use it together with other things like volatility filters, trend indicators, or during shock events where emotion amplify move. So you can treat sentiment that I shared just now as a context, but not as a trading system on its own. Right, next. So what we need to do next, changing the game to technical analysis. We tested what traders often assume. You can ask around. Usually the FKL traders, they use RSI, stochastic, and CCI, the commodity channel index. So we try to, backtest. We try to do proprietary backtest. How if we just follow the plain rules, buy when RSI falls below 30 on daily FKR returns. We also track each signal, log every trade, and measure the outcome. So overall, what we can find, RSI and CCI indeed give a small but consistent. Okay, it's a small but then consistent. If you're happy with it, then yes, you can still continue using RSI and CCI. Stochastic, I would say yes, I agree, because stochastics most of the time it works with CPO, but then FKLI is not so much, and the data substantiate our assumption. Stochastic is not really working for FKLI. Overall, all strategies had limited returns, and of course, it involved risk. And I would say everyone will agree that if we can put a statement here, there is no magic formula, just those with ages. All right, next, we are trying to do a performance measurement by using 5 metrics. Okay, first the winning rate, second average return per trade, number 3 maximum drawdown. Okay, number 4 profit factor, number 5 expectancy. So how are we going to use them? Win rate, let's just say if you make 10 trades and 6 are profitable, your win rate is 60%. Average return per trade, if your profitable trades max 50 and your losing trades lose 30, on average you earn 10 ringgit per trade. That's your average return. Profit factor, let's just say you make 2,000. I'm not sure how long you need to wait, you need to trade in order to get this 2,000. Most of the time 200, and lose 1,000 or 100, your profit factor is 2.0. Expectancy, when you combine everything, let's just say you win 100 on average 60% of the time and lose 50 ringgit In the other 40%, expectancy is 40 ringgit per trade. This one is much more reliable metric. So let's just see the result of that testing using RSI, stochastic, Williams R, CCI, and ROC in both positions, long and short. So let's go one by one. For RSI, it showed base consistency. If you use RSI for long position in FKLI, 52% at least. Okay, 52% at least the winning rate. And out of 5, it has the highest expectancy among the other indicators. The drawdown, 1/5, okay, negative 20%. I would say moderate, and it shows some stability. So this suggests RSI can work as a tool for spotting also rebound. Okay, so that is RSI for long position. How about if you use stochastic for long position? Stochastic, in other words, it gives a win rate of 51%, slightly smaller than RSI just now. But again, the return per trade were too small for us to be happy on it. Okay, profit factor just above 1 shows barely any advantage after cost. It also had the smallest drawdown. This one is, I think, good for risk averse, the one that really afraid of risk. So it's less volatile, but then stability also is on the upside. I would say for me, best treated as a confirmation tool, not a standalone trading signal. All right. Next, William. William achieved 52%, and expectancy is quite decent, and it's a fair trade consistency. Other than the decent expectancy, the trade consistency also quite decent and fair. Comparing William R with stochastic, William R, it reacts faster. However, it is best applied for spotting fast overbought and also reversals, not for long trends. Okay, so that is William R. How about the CCI? This was my favorite for CPO. CCI, it matches the William R performance on winning rate, and expectancy, but it gives you the worst drawdown. There's a downside of it. It is best applied with volatility filters if you want to cut false signals and smooth performance. So in a way, CCI can deliver, okay, it works, but only with tighter risk control compared to other indicators. Next, ROC. ROC is quite, I would say it's quite rare, it's quite seldom to be used, but then it exists in investing.com chart, it exists in TradingView. Okay, ROC, you better don't use it. ROC had the weakest performance. Okay, it's best applied. Okay, it's best to be applied with stronger momentum, but advisable not to use it at all. Okay, just it doesn't give us any additional advantage when we use it with other indicators. So among all 5 indicators, ROC for long position sits at the bottom. Okay, it's not really reliable if you want to have long positions in FKLI. So how about the short? If you use RSI for short, still RSI was the strongest among the short strategies. Okay, it is considered the best for long. It's also considered the best for short, with the highest average return and a profit factor above 1. The winning rate, as you can see here, also below 50%, but still deliver because gains with a loss. And I would say it is best applied when markets are overbought and good for short term. Again, not for major trend reversal, as in like when we use it in a long position just now. For stochastic, okay, using stochastic in the short position, underperform. Just now, long positions quite okay, but then for short positions, not really. You want to use it, best treated as a timing tool, not for every trade, exits or entry. The William R has the weakest. So if you want to use it, better to be strictly used with limited fast moving reversal, and do not forget about the stop loss. That is William R. And lastly, no, second last is CCI. If you use CCI for short position in FKLI, the winning rate is just under 50% and the returns negative. So not really useful in here, but works better if you combine with other indicators. But then if it doesn't give you any positive return, why are you still using it? Better don't use it, right? And lastly, ROC for short, the riskiest, the one that you should avoid. So when you want to short the market, you want to short the FKLI, I think the best is use the RSI. So here I give you a summary of the strategy tool. RSI works best, okay, especially in sideways. But then you don't use it alone. You should have combined it with other indicators as well. Stochastic, if you are expecting pullbacks, it's not a leading signal. William, it's quite sensitive, okay, because it reacts fast. Then CCI and ROC, if not applicable, you can just avoid to use it. So RSI, stochastic, and William R, I would say reliable tools for you to use. All right, how are you going to choose the right leading indicators? Where is this? All right. So how are you going to choose the right leading indicators? The first thing first is you have to identify, you have to identify what is your trading goal. Okay. If you want early reversal, then again, stochastic, William, and CCI works best. Okay, CCI sometimes. For breakout, you can focus on the volume and money flow tools like OBV or MFI. For you to spot extreme overbought, oversold zone, RSI and other short-term oscillators also can be used. To track smart money, again, I like OBV, advancing, declining, and also the money flow index, MFI. Momentum, if you are expecting momentum to accumulate or to deplete, ROC can be used occasionally. So this is the first, this is the first step for you to choose the right leading indicators. Number two, prioritize volume-based indicators first. Remember, what we're trying to see here is actually sentiment analysis. So sentiments cannot be read, okay, cannot be read by seeing the prices, but the volume. The volume is the confirmation layer. The price, I would say the price without the volume is just a noise. So for example, you can use OBV, okay? OBV usually, if you have OBV in your chart, okay, on balance volume, usually it moves first. After that, after it shows accumulation, a very clear accumulation, then only you will see the price react. There are three indicators, there are three leading indicators that you can try. The OBV, MFI, and AD, the accumulation distribution. You can spot the volume accumulate and deplete or decrease right before the price react or the price shows you the pattern or the movement. Number three, try to spot divergence for early warning. Because sometimes indicator tells a different story from price. Price tells you the other thing. Indicators tells you a different story. So for example, right, if OBV rises steadily while price looks fat, that is what we call something is happening back there. It's a hidden accumulation. So again, big players, some players, okay, some people with big capital, big money, they are loading their orders quietly, and the next thing you see is the breakout, right? That breakout for retail traders, they always use this breakout as a confirmation, but the problem is that confirmation is really quite late. So I think you better change the game if you are that kind of a retail trader. Number four, match your time frame. If you are trading intraday, okay, if you are trading intraday, these are the tools that you can use. If you are into swing or short term, these are the tools that you can use. If you are kind of medium term, some of us work 9 to 5, but then still want to trade FKLI. So these are the suggestions that I can give you. It's not surely 100%, okay, but then at least it can help you with something. okay, based on the time frame, your trading time frame, right? Number 5, probably don't put too much in your chart, okay? Don't stack the same type of tools. Let's just say for intraday traders, fast oscillators like stochastic and CMO, both of them, they capture quick swings. If you use them together, if both of them showing the same signal, then it's okay. But how if they are diverging? So which one you should, you should trust? Then it actually gives you confusion. Should I choose, or should I trust a stochastic, or should I trust a CMO? The next thing you know, you choose not to trade on the day. So that is, I would say, the worst decision, because you're missing out on opportunity. Other than that, for short-term trades, I would say MFI or BVRSI still reliable. Okay. Medium-term positions, again, the advancing declining line, any volume profile, you can check in investing.com and TradingView. Any volume indicators, any types of volume indicators that still can give you some clue what is sentiment happening right now, on current sentiment. So it's just that don't stack them together. Use, I would say, one or two of them. You put them together all at once, the next thing you know, you are confused. All right, number 6. This one is optional. I would say preferably and advisable for you to do, but then again, it's optional. Good for you to do, but then if you don't have time, or if you don't have effort to do it, I would say it doesn't really affect that much. But preferably, if you have time, validate with backtests. Okay, try to do backtests. What's the purpose of backtests? Purpose of backtest is actually giving you the proof. Okay, indicators, as what we discussed just now, as what we, I explained to you. Okay, indicators are, it sounds good. Okay, it sounds good on paper, but then still we need proof. How are we going to get a proof? We backtest it ourselves. We are not going to refer from other person's testimony. Other person says this indicator is good. Other person says this indicator is good. How if, we just do our own backtest, and that is the best reference for our own trading? Because the goal is not a perfect prediction. Everything is not perfect. If everything is perfect, I would say I will resign as as academician and do trading. No, everything is not perfect. It's always have weaknesses somewhere. It's just that we are trying to see, if we can have any substantial proof of our strategy. Okay, another check of the robustness and reliability of our strategy. So that's why backtest is important. Overall, I would say, if, let's just say, after you do your backtest, okay, but then the results not really, not really showing up, not really performing, you can conclude that it won't save you in live trading. Okay, because when you do your backtest, you are using your real historical data. Those data are real. So if based on your backtest it doesn't work, okay, of course in the live trading as well, it won't work. Right. So it's a very simple math. So here again, okay, I want to share with you the most reliable, not the best, okay, not the perfect, not the best, but then the most reliable, okay, the 5 most reliable indicators so far for FKLI. One thing I think I should remind myself and you as well, these indicators, the reliability and the robustness change over time. Okay, last time RSI not really working. Last time, when I say last time, it's like 2014, 2015. It doesn't really work. A lot of a lot of traders, okay, when I talk to them, they say RSI is not really working. However, when I try to backtest using RSI, okay, it shows a good performance, as in like what you saw just now. So RSI can be considered as well. Okay, RSI still can be considered as a reliable. RSI stochastic is quite reliable. Okay, for you to use it in your FKLI. The rest, probably you need to use it with caution. Okay, we come to the last part of my sharing. Okay, how to do your own sentiment analysis. When you're doing it when you're doing this by your own, you don't have sophisticated advanced tools, advanced whatever. All you have, at least in your laptop or in your desktop, you must have Microsoft Excel. You must have you must have a spreadsheet. So what you need to do is basically you can create a spreadsheet from your Excel, then create a column, date, previous close, open, gap, signal like this. The information inside the column, you can have them probably from your brokers, okay, from your dealers or from your own trading platform. Try to do your own, your own record. Let's just say 5th August, previous close is 1612. It opened at 1618. It means that it gap up. Although it's just a 6 points up, for FKLI, it's still gap up. So your signal here, you can just put two direction, bullish and bearish. 6 August 1618, the previous close, this one. Okay. It opened at 1609. It's down. You can put bearish. You just keep this 5th August, 6 August, 7 August, and onwards. Okay. And number two, you can use your FKLI volume data, download the FKLI volume data and calculate by yourself. This is another spreadsheet. You can calculate the volume, okay, like this. The day, the volume, 20-day average, spike, yes or no, price move up or down, sentiment bullish or neutral. Why? Because volume confirm conviction. No spike, no noise. Right, next. This one, it really needs, how to say, high effort, okay? A really good effort and passion. A news-based headlines tracker. Last time I saw one, not to say one, I think few of retirees when they trade FKLI, they do this. So this one is inspired from my former clients. Okay, what they did last time, they created a spreadsheet. Okay, with the date, with the headline. Okay, a very short one. Okay, the headline doesn't matter where did you get the headline, from the Age, from Reuters, from CNBC, Wall Street Journal, doesn't matter. Okay, just put a headline there. Then you can conclude whether it's a bullish or bearish. Then you can put a sign going up or going down, sentiment negative or positive. So this actually at the end, it builds pattern memory over time, news versus the price. Okay. Number 4. After all and overall, you can see that from your habit of recording and tracking, okay, no scores, no calculation, just a daily habit of recording price, volume, and narrative. It will give you, a sense of insight from your own recording, okay, from your own build pattern. Okay, it's not really a complex, difficult math. It's just something that you build by your own. So from there, you can see the pattern. If news like this, how impactful are these news? Okay, how strong is this news? Right. So it's not something that, how to say, rocket science, but it's something that you can create by your own, from your own spreadsheet in your own laptop. Then from your record, from your own spreadsheet, you can formulate your own strategy. First, find any, recurring combination that lead to consistent FKLI move. For example, positive plus gap up, plus strong volume, it shows price tends to rise. If you see negative sentiment, okay, plus gap down, plus strong volume means that price tends to fall. But let's just say a neutral, low volume, sideways, nothing. So this is obvious if, let's just say, you see recurring combination that lead to consistent FKLI move. This one is the first one. The second one, you can draft something simple. Draft simple entry rules. For example, buy when sentiment is positive, gap up, volume spike, confirm. Sell when sentiment is negative, gap down, volume spike, confirms, and so forth and so forth and so forth. You can put a rule like this, okay? Then you can put a condition like this. So I believe that's why the retirees, as what I mentioned just now, they can do things like this because it takes time. It takes time, it takes effort. However, if you're really serious trading the FKLI, I would say this one is a good reference checkpoint for you. Number 3, back test your rules and in Excel. Once you draft your rules, your next step, of course, you need to test them. Okay. put column there, the signal, entry price, exit price, and manually put a profit loss per trade. Usually, I think every trader when they start trading FKLI, they will do something like this. They are quite afraid to start trading. What they do is a spreadsheet. So I think you can do the same thing as in like what the beginner traders were doing last time. I think some of us also like that. We are we are afraid to trade in the real trade. So we just do the spreadsheet, try to make some, record there. So from there, you can calculate the total profit, as in like what we did last time when we are beginner trader. Find the total profit, the winning rate, drawdown, average return. So you can see if there is any, false signals. For example, um, any signals that combine or any signals that is disturbed by noise, you can add other filters. Let's just say instead of RSI below 30, above 70, you can replace them with RSI below 40 and above 60. And try to stick with the strong headline sources to reduce the noise, if you will. So at the end, you will have something like this in your spreadsheet. You have the date again. Okay, you record every day. The close price, the gap, the volume movement, spike or no spike, price movement up or down, the headline summary, sentiment, signal, entry, exit, and the profit that you get. This one is actually mimicking, like I said just now, the record or the logbook of beginner traders. But I think there is no harm if we just repeating what we used to do before. Why? Because sometimes, when our trades go south, there is nothing wrong if we take a back step and try to, retest them again in a spreadsheet so that we won't lose any more money just because of we are confident that we are experienced traders, so we don't need this spreadsheet. But again, everyone needs spreadsheet. Okay, and lastly, the thing that we can have as a key takeaway, sentiment drive short-term FKLI move. Like we covered just now, it often moves before the price react. The institutional players, there is no way for us to track them, but we know that institutional players always come with a big money. Okay, they have big capital and their movement is very obvious. It's quite rare, or I would say it's impossible for retail traders to have the ability to move the market. So when you see there is a sudden big move, abrupt changes, it means that the big money is coming in. So number three, news sentiment alone is not predictive. Okay, use it with the volatility filters and others like volume spikes and technical confirmation. No single indicator works all the time. Combine tools from different categories. It means that we cannot say, okay, one indicator works well in every trade. Keep trying any other indicators. See if it works in every other trading situation. Number four, back testing. I think back testing is a must. For me, it's a must. Why is a must? Because it's data-driven decision. Okay, whatever that you see, the input that you get from back testing is a data-driven decision. And lastly, whatever works during long position, probably it doesn't working when you try to short the FKLI. Short strategies behave differently. If let's just say you see some indicators works well when you long the market, when you short the market, it doesn't really give you that much of outcome. All right. I think that will be all. I pass the floor back to moderator, Mr. Saul. Thank you.